Welcome back to Pitch Deck Review Live, where today I am reviewing Shirley's pitch deck about Neoteric remodeling. Let's get cracking. This is a pitch deck I haven't seen before. I received it a couple of seconds ago. What I want to do is give you an impression of what a investor sees when they see a particular pitch deck. Home improvement solution since 2021. There's not a lot in this cover slide, but I immediately see what it's about. It's something about remodeling homes and that the company's been running for a little while. The file name also is called pre-seed. So from those things, I have a couple of pieces of context that shows what this is all about. So what I'm seeing so far is that this company is doing remodeling, been around for a little while, but I don't really know which aspect of this that this company touches. So I'm going to go straight into it. Accelerating construction procurement. There's a typo there, which is not a disaster, but it's not a great first impression. We've been in a long stretch of people struggling with getting the right hardware and building materials due to a long ongoing supply chain challenge. So if this company is helping solve that, I think that's actually a really powerful thing for them to be doing. What does the company do? Why do construction projects fail? This is the problem slide. And we're going straight into the actual impact, which I'm really happy about. 6% net profit margins, terrible for any business. 75% of projects go over budget and 77% of projects are delayed. Now, I love that this isn't talking about the specifics of what happens, but that it's focusing on the impact of what is happening. That's a really good way to tell your story about the problem. Because a lot of the time people talk about the problem in kind of framing of, hey, the problem is my kid got to get to school on time, or it's really hard to solve a particular problem. But unless you also know the impact and the amount of time, money, hassle, burden, human lives, all the things that fall into that category are also impacted, you don't really get a good understanding of what the problem is. So I love how this company is doing that. Inflated pricing is a problem. Limited pricing is a problem. I believe all of this and that this is a relatively big problem. Meet our customer. Responsibilities and challenges of a self-performing general contractor. Self-performing, I presume, mean that the general contractor is both contracting and doing some of itself. Okay. So this positions the company in this space. This is really about how impact limited workflows building projects. Small crews doing small pieces of work. I think that's a really interesting space to be in. Although where my mind immediately goes is how big is this as a market, right? It seems like it's a little bit niche, which maybe this is now at least a yellow flag for whether or not this is venture fundable. Okay, let's move on. Our solution, reduce material costs through access to manufacturer suppliers, project specific pricing, timely visibility on pricing, product availability. I think that's a pretty good solution. The reason I like this as a solution slide is that really you're talking about a high level change that this company introduces to everything that's happening. And then from there that they're showing how it thinks about what this solution could be. It's a little superficial, but that's completely okay for the type of story we're trying to tell here. From there, we go into how it works. Okay, so this is the product level slide. You upload a floor plan, you receive tailored recommendations through a cost estimator, and then you get a mood board. Great. So that shows the flow through the product. It isn't entirely clear how much of this is built, but I imagine all of this is live. The design isn't super slick, but that's okay. So what we're looking at here is a product that is in the process of being built. That's completely okay. Show what you have. Market opportunity. Okay, a $56 billion market. So what I want to warn about here is that I am not entirely clear if this is a in terms of the actual volume. Yeah, I'm not entirely sure what this TAM actually represents, because I want to make sure that these total addressable market isn't the gross volume of all the sinks and planks and screws that you put through the machine. This should actually be the total addressable market for money you could make. My curiosity is whether if Neoteric actually gets full market penetration, whether there is a world where it could be a $56 billion market. I'm a little fuzzy on how this actually drills down, where these numbers came from. The company has listed a gross profit per customer times the number of years. I think having more clarity about what the market opportunity is, what the TAM, SAM, and SUM actually incorporate would be very helpful here. Now, is that super critical here? I'm not entirely sure because the thing is, the market obviously is building, right? Building is huge. I have a sense that this is a problem worth solving and a space where you can make a lot of money. I just want to have a deeper understanding of how the company thinks about this in the context of the company and where it's hoping to grow. Okay, cool. So next, combined business model. Now, really, this is a pricing model and not a business model. The business model would also include things like how many customers are in this, or how do you attract those customers, etc. There's a pricing model that's important. Competition. Okay, so here it's looking at the various companies that are its competitors and the various pricing. So I'm not entirely clear on what pricing plan this pricing comparison maps to. Oh, so this shows how much other companies have raised. Okay, great. I think this is a good competition slide. If I were to do due diligence on this specifically, what I would do is actually do some Google searching as well. Who is doing stuff in this space? What are their pricing models? Who else is out there? Just to make sure that the company has captured a full competitive landscape. This seems pretty decent. It seems like I have a good overview. And when you're doing the pitch, I would like to talk to you a little bit more. Hey, are these competitors threats in any way? What does the threat look like? Why is that important? But I think we're off to a pretty good start here. Go to markets, associations, collaborations, and supplier agreements. This is a little tricky because these are three pretty different sales processes for how to get in front of your customers. And I want to know that you as a team have expertise on how to actually fulfill sales in this. If you have a very strong B2B sales experience, so you can work with all of these associators, collaborators, and supplier agreement type folks, then this is a believable go-to-market plan. Now, if you don't have that, then as a go-to-market plan, this feels a little bit like a brainstorm, right? Oh, we can do something here, do something there. It's good that you've thought about this, but I don't know. This doesn't strike me as particularly believable go-to-market plan. A good, solid, thorough go-to-market plan often includes a lot more detail about how much does each channel cost? How long does it take to sign up a customer? What does your funnel look like? It says associations, collaborations, and supplier agreements here. I see three, and two logos. So that's 6, 7, 8 logos. Now, is 8 your entire funnel, or is 8 where you're going to start? How many people are actually in these funnels? Have you identified them? How big of a sales team do you need? B2B sales can be really, really hard. It comes down to the kind of approach you can take with your customers in order to figure out what is your conversion rate likely to be? How experienced are you in making these types of sales? Here you have leverage 8,000 general contractors, but that is probably across these associations. I'd like to understand how far along the road towards getting these association collaborations and supplier agreements you have would be helpful for understanding how realistic this go-to-market plan is. Okay, meet the team. The first thing that happens is we have an advisor as the first person on on the slide. That is generally not a great idea because I don't really care about who your advisors are. What I care about is who are the people involved with this company. So Shirley, Matthew, and Sheeta are the main people. Now, Sheeta is the UX designer, which means she is the co-founder. In general, for the team slide, I would only include your actual co-founders. The main reason for this is that as an investor, I'm investing in the company, not in individual people. But also the co-founders have the largest amount of equity in the company. By investing in the company, I'm making sure that these people are going to stay around, right? You are on a vesting schedule. You're going to probably stick around for long enough to see this company become a success. And so really the only people I care about, because employees come and go, right? Advisors, I don't know how active this advisor is and how in-depth they are and how helpful they are. So in terms of who I'm actually investing in, it will be the co-founding team. I'm going to ignore the two other ones on this slide for that reason. I'm going to look at the co-founding team specifically. Shirley and Matthew. Shirley says she's an expert in relationship management, sales lead, and customer success. Those are important skills. But I want to know that there is perfect founder market fit here. And if you're going to go into the building industry, I would love to have seen 30 years of experience in building or lots of experience as a general contractor. Um, there's nothing specifically about Shirley's bio here that makes me think that she's the perfect founder for Neoteric. Matthew, fractional CTO, Dev $2 co-founder. I don't know anything about Dev $2, so I'd have to Google that and find out what is it? How did it do? Is what he did in that company relevant to what you're doing here? Automation engineering, startup product design. Now, this slide feels incredibly generic. Apart from being a co-founder and CEO of Dev $2, which I haven't heard of, so I don't know how to evaluate that, and I would have to Google that. Actually, let's do that. So this is PitchBook, and the company that was listed on the slide deck was Dev $2. Dev $2 doesn't exist in PitchBook, which likely means it didn't raise any VC funding. Dev $2 is the website here. Tech co-founder as a service. This person is a fractional CTO of this company, but is running a company that does fractional CTOs as a service. That's a little worrying. Dev $2 here has, okay, so it only has one person listed as a employee, but that person isn't Matthew, that's Raleigh. Okay, so long story short, this fractional CTO, I can't find any information about. They say they're the co-founder and CEO of this company that doesn't seem to have raised any venture funding and says they're an expert in automation engineering, startup product design, which is great, but show me the receipts. This team slide is throwing up lots of red flags. How is this the perfect team to build this company? What are they doing that is unusual, different? What is it about this team that makes me want to go, oh, hell yes, I'm going to put my money in? The UX designer, great. I'm glad you have one. And the advisor, also glad you have that person. Now, if this advisor is actually involved with a significant amount of time, and it also says that he's an expert in strategy sourcing and construction development, that might be more interesting. Let's look him up. In this case, I'm going to go back to Facebook and again, and search for BT House. Also doesn't appear to have been VC funded. Also not found. In this little exercise of looking up these various people, I'm not finding what I need as an investor to go, yeah, they know what they're doing. As in, they have experience that's relevant to the field, startup experience. Any of those pieces are missing. This becomes a really tough sell. But I also think there's probably a better way of doing this slide. These folks didn't decide to start this company on a whim, right? They have a passion here, they have an excitement here. And so my curiosity would be like, hey, Shirley, what is the thing that makes you excited about this company? Why is this the right thing to be doing? Where's the opportunity? Why you? Why this? Why now? Telling a better story on the team slide about that would give a better first impression to investors who might want to invest in this company. Okay, traction. The go-to market is partially covered here, which is great. 350 prospects to sign user agreements, great. Conducted customer interviews, great. Monthly blog and waitlist is not that relevant, but it's good that you're doing stuff. E-commerce MVP launched in April. Okay. Most of these things on this traction slide aren't really what I would refer to as traction, but it shows that activities are happening. The way to think about traction is anything you have done to de-risk the company. The stuff on here, like 350 prospects and customer interviews with 25 people, is really interesting. I'm curious if with the customer interviews, you could have an appendix slide. You could have an appendix slide like, hey, we talked to 25 general contractors, and this is what we learned. These are the problems they're experiencing, right? Maybe have a separate report or an appendix slide that summarizes some of this research. That can actually help pull out some of the information points, and that might show that you have more traction than this slide would indicate. Now, having a wait list, having a monthly blog, all that kind of stuff, like vanity metrics, they don't directly say, okay, yes, this company is definitely going to be successful. They are activities, but they're not activities that make me go, oh, yes, definitely, I should invest here. This one needs a little bit of work. I also do appreciate that a lot of early stage startups just don't have traction. That's completely okay. But you still got to come up with something like, why are you different or unique or special compared to a lot of the other companies out there? So 18-month outlook. We have an LTV to CAC. Usually that's represented the other way as a CAC to LTV, but that's fine. LTV to CAC ratio of 1.3. That's pretty low. You want that to be 3. And I think the interesting piece you would want to say there is, okay, this is how we're going to improve this CAC to LTV ratio over time. And the other thing here is there's a lot of good numbers. You have a pretty clear plan and visibility on what you are planning to do over the next 18 months. Now, Y Combinator typically says you want about 15% week on week growth for hypergrowth to qualify. So here, quarter by quarter, 6.7% growth is very timid. This makes me think that the company isn't quite on the scaling path yet. That's totally okay, but that's also a little bit of a red flag. We're not growing nearly as fast as I need to see as an investor to see this growth happen. I'm glad you have this as a spreadsheet, and this becomes a jumping off point for conversations we can have, right? Path to success, customer discovery, cost estimator, market, partnerships. Okay, so the March 2026, end of this funding round, I believe, you're saying you have a GMV of 4.8 million. The GMV is great, but what I really want to know is how much of that money is flowing into the company. What is your actual revenue into the company in terms of your cut, etc.? Yeah, and the rest of this makes a lot of sense to me. Rapid construction innovation, sure, but I think we've been on this construction innovation train for the last 30 years at least. So that's not necessarily making it urgent. Demand for efficient procurement solutions, yes, but why? There's always been demand for efficiency. I think you could actually talk about supply chain challenges, right? Cost sensitivity in affordable housing, sure. But as an investor, do I really care about that? Is there a big enough opportunity in affordable housing that it's worth me investing in? I'm not sure. In an investor pitch, maybe you remove affordable housing and you talk about the specific opportunities you've found. Yes, affordable housing is super, super important, but look at this through the lens of investors, right? How much are you raising? It doesn't say. It's very important that you on your fundraising slide show how much you're raising, I think. And there's a couple of other red flags here. So here I would have loved to see SMART goals. By when are you delivering a certain metric and how is that important to you as a company? The other thing that's happening here is that you're spending 60% of customer acquisition, but only 20% of product development. Now, that makes sense if you're a growth stage company, but I don't think you are because this is a pre-seed round. As a tech investor, I want to see you spend the vast majority of your money on technical development. So here, product development has a 20% bucket, general expenses 20%, and customer acquisition 60%. What I want to see as an investor is 60, 70, maybe even 80% spent on tech development at the earliest stages. Because customer acquisition is great, but that's not where your company becomes more valuable. It becomes more valuable as your tech starts growing and developing and becoming a power player in the market you're at. And so I don't know how much you're raising. It doesn't say. That would be helpful to talk about. I would like to see a single specific number. Raise $1 million, $2 million instead of a range. And I would love for this to not be specifically about percentages. I would love this to be focused on the milestones because I really want to see how much are you going to get to and by when. You do say 60 users worth of customer acquisition, sure, but I want to see how much revenue does that represent and by when. Operator expenses, sure. Now, founder draws, I don't know about. That's just wages, right? If you're starting to do draws, i.e., if you're starting to pay dividends, that's very unusual in an early stage startup. And besides, if you're planning to pay out dividends, then you have to pay out to all the investors. And that's just a very uncommon thing here. Use of funds, product development talent, sales executive talent, and runway miscellaneous and buffer. Sure. All of that makes sense, but I would have much preferred to see this as specific, measurable, relevant to the company goals. Because the thing we're trying to do here is to paint a picture. Hey, you give me $1 million. I run this company for 18 months. At the end of spending most of that $1 million, the company looks like this. We're going to have this many customers, do this much revenue, have this many product milestones hit. We're going to hire these people. As an investor, I can dream with you. I look at the specifics. If the company delivers on all of these very specific things, are we able to raise another round of funding? If the answer is yes, then that's 2 thumbs up. Fantastic. We're good to go. If after you do all those things, the company doesn't really look like it's going to be able to raise the next round, then all the goals are a little bit skew with. And without specific goals, it's really hard to evaluate how ambitious the company is or where it's going to go. The only place the ambition really comes through is in this financial model where it's doing 7% of growth month on month, which is very low indeed. If that was 10% per month, I'm like, okay, now we're talking. 10% per week, yeah, you're on hypergrowth. 15% per week, great. Very much on the VC track. This is not a bad pitch deck. It's showing that the company understands what the problem is. It has some ideas about how to solve it. But there's a lot of little bits and pieces that I would have liked to have cleared and made more professional and contextualized further for me to even put an angel check in. Now, to VCs, I think this deck is probably a no-go. But you're not that far off. Tweak the team side and really explain why the founder market fit is perfect. Why you? Why this? Why now? Tweak the ambition of it. If you're measuring growth in the single digits percents per quarter, that's not VC level growth. So we have to figure out something there. Maybe a different way to express that is like, hey, we're not a growth stage company, so we're not going to express our growth as percentages. Instead, we're in the place of really building a company that is developing the tech so we can start the sales process with the next round of funding. We're signing up enough test customers now to get to a place where we can really go, okay, these are the right test customers. We are developing the right product and we're on the right path. So yeah, that was my live pitch deck teardown. Shirley, do you want to jump up on stage? And if you have any questions or if you want to talk about any of this?
Thank you so much for that. That was just incredible. I think I've been following you for quite some time since I first saw you on TechCrunch. So this has been quite a pleasure.
Awesome.
Uh,
Thank you for your kind words. What was it like to receive that?
a little daunting, but it explains a lot. I think there's quite a bit of disconnect every time that I am presenting. And when now obviously somebody's just looking at the deck without me during the presentation. And that's exactly what I've been looking to get feedback on. And this was absolutely incredible. I do the harshness because there's also a lot of things that are missing. And
Mhm.
especially in terms of the design and the presentation, that's one thing. And then, of course, the meat and potatoes, if we can call it, that's also missing. One question that I did have just in terms of the business model, because I think that's just the one part that I was taking notes and wasn't
Mhm.
too sure. So that slide particularly reads more as a pricing model and not a business model. Is that sort of what you had in mind? And in terms of adding more details, for example, like you mentioned, how many customers are in this? Can you maybe go over that one again?
When I talk about business model in general, what I'm looking for is the full business model per customer category. Where do these customers come from? What does it cost to acquire them? What do they pay? It's a pricing model, but also what's the lifetime value? How long do you expect them to stay around? A pricing model is a really important part of the puzzle, but you want the broader picture of it, and that makes it a business model, right? It's like, how much does it cost you to serve each of these customers? This is a good pricing model, but I would rename this as pricing model. Then I would add a business model slide that says, for my pro customers, I expect them to stay around on average for 18 months. I expect to acquire them for about $600 each. If they stay around for 18 months at $72 a month, that means that they pay me $1,200. It costs me $600 on average to acquire one, which means I have a $600 profit by the time this customer churns. And that all of those things together become the business model because now you're talking about the full value of this particular customer to your business. The business model in general is all of the things that are related to these customers, the acquisition, the service delivery, all those types of pieces of the puzzle. Does that make sense?
Yeah, that's pretty good. And I just have one more just at the end touching on the raise. Obviously, the amount would be great to have, but I think you hit the nail on the head is that essentially we're raising the money to complete this customer discovery in terms of the angel round or pre-seed round. How do we position that in terms of the milestones? And then the second part, showing traction as an early stage company is pretty difficult. So in terms of the milestones and the traction, how would we position where exactly we are that it doesn't sound that it's not VC backable?
The pitch deck is called Neoteric pre-seed. So I know it's a pre-seed round, but pre-seed in my world could be anything from $200,000 triple F round. So friends, fools, and family, or right up to $1.5 million pre-seed if you're doing a small institutional round. But the range is pretty big here. Now, this deck, if you were to say, hey, I'm actually just doing a 300,000 friends and family round, then I'm like, you know what? This deck is overkill because the people you're going to be raising from are people who know you personally. And they're going to go, hey, Shirley, she's great. She knows what she's doing. She's in a market where I trust her. The problem is worth solving. I have faith in her ability to build something here, have $10,000. And then you repeat that 20 times and you have your round completed, right? Now, if you're doing a institutional round, then there's going to be a lot higher demand for professionality to get you across to the finish.
Thank you so much, Haje. This has been fantastic.
Amazing. Amazing. Thank you
Awesome.
so much.
All right. Thank you so much. Thank you, everybody else, for coming, and have a beautiful weekend. Cheers.